we are going to tell you goods and services tax in India. First, let you know about the GST. The Goods and Services Tax (GST) is an indirect federal sales tax that is applied to the cost of certain goods and services. The business adds the GST to the price of the product, and a customer who buys the product pays the sales price inclusive of the GST. Next, you have to know the existing indirect tax structure in India. Indirect tax is not directly levied on the taxpayers. This tax is often levied on goods and services, which results in their high prices. A few examples of indirect taxes in India include service tax, central excise and customs duty, and value-added tax (VAT). Constitute amended to provide concurrent powers to both center and states to levy GST. Types of GST. Number 1. CGST. Number 2. SGST. Number 3. IGST. Number 4. UTGST. CGST stands for Central Goods and Services Tax. It replaced all the previous taxes under the central government. Some examples of such taxes are central surcharges and cess and central excise duty. CGST is levied on the movement of goods within a state. SGST, the GST collected by the state government, is known as SGST, which is applicable on transactions within its geographical boundaries. Under the new tax regime, previous state taxes like entertainment tax, VAT, and state sales tax became non-functional. IGST stands for Integrated Goods and Services Tax. It is generally applicable during interstate transactions, i.e., transactions between two different states. Among the types of GST, it's levied on supplies of products and services between two states and even on exports and imports, IGST plus customs. The central government is responsible for its collection as per the IGST Act. Let's simplify this with the help of an example. UTGST stands for Union Territory Goods and Services Tax, applicable to the transaction of goods and services in the Union Territories. It is levied on the supply of products in Andaman and Nicobar Islands, Lakshadweep, Daman Diu, Chandigarh, and Dadra and Nagar Haveli. Let you know benefits of the GST. Before the GST era, multiple taxes were levied by the state and central government. Therefore, regulation of these taxes was quite a hassle. GST is a convenient and easy to follow tax regime. It minimizes the chances of tax mix-up between the central and state governments. It brought uniformity to the taxation system. Therefore, this thorough guide on types of GST will leave no room for future confusion. GST tax subsumed. The taxes subsumed in GST include central excise duty, additional excise duty, service tax, additional custom duty, countervailing duty, special additional duty of customs, SAD, value-added tax, VAT, central sales tax, CST, entry tax, luxury tax, entertainment tax, taxes on lottery, betting and gambling, octroi and purchase tax. Next, what are the GST slab rates? In India, almost 500 plus services and over 1300 products fall under the four major GST slabs. These comprise rates of 5%, 12%, 18%, and 28%. The GST Council periodically revises the items under each slab rate to adjust them according to industry demands and market trends. The updated structure ensures that the essential items fall under lower tax brackets, while luxury products and services entail higher GST rates. And here are some examples of goods and services which are the belongs to the different slab rates. Pause the video and watch. You have to know what is the GST A-Way bill. A-Way bill is short for Electronic Way Bill. GST A-Way bill is a document used to track goods in transit introduced under the Goods and Service Tax. A taxable person registered under GST involved in the transportation of goods with a value of over 50,000 rupees must possess an A-Way bill generated on the GST portal. Reverse charge mechanism. What is reverse charge mechanism? Typically, the supplier of goods or services pays the tax on supply. Under the reverse charge mechanism, the recipient of goods or services becomes liable to pay the tax, i.e., the chargeability gets reversed. QRMP scheme. This is a recent amendment in GST taxation system. If a taxpayer opts for this scheme, he will have to file GST returns on quarterly basis instead of regular monthly basis, but tax payment will have to be done monthly. QRMP means quarterly return monthly payment. Input tax credit. Input tax credit, or ITC, means the goods and services tax, GST, paid by a taxable person on any purchase of goods and/or services that are used or will be used for business. ITC value can be reduced from the GST payable on the sales by the taxable person only after fulfilling some conditions. Output tax credit. Output tax is the tax that a VAT-registered business is required to charge on its taxable supplies, broadly, its sales, at the standard and reduced rates of VAT. It is payable to HMRC after the deduction of any recoverable input tax. GST return. GST return is a document that will contain all the details of your sales, purchases, tax collected on sales, output tax, and tax paid on purchases, input tax. Once you file GST returns, you will need to pay the resulting tax liability, money that you owe the government. Here we discuss the all-purpose of all kind of GST return, like GSTR1, GSTR3B, GSTR9, GSTR9C, GSTR4, GSTR9A, GSTR5, GSTR6, GSTR7, GSTR8, GSTR10, GSTR11, GSTR2A, GSTR2B, GSTR4A, GSTR3A. And you have to know the dates of GST return last issue date. Thank you for watching us. We provided financial services, all types of loan and insurance sales and service, financial consulting, personal and business manpower recruitment, manpower outsourcing, HR consulting, marketing and sales consulting, digital marketing. For further query, contact us.